which companies are required to conduct a secretarial audit? Is it applicable to private companies? And what is the 50 crore threshold? And what is the 250 crore turnover threshold? And what is the 100 crore borrowing threshold? Which borrowings to be considered, and when form MR-3 is required, and who can conduct this secretarial audit? What happens if there are qualifications, or we can say observations in MR-3? Is secretarial audit applicable to listed companies differently after the SEBI amendment? So what is that exact amendment? What should companies do to avoid these qualifications in the report? So let's understand the secretarial audit through a simple FAQ format. What is secretarial audit? Secretarial audit is an independent examination of the company's compliances with applicable corporate and other laws. So it is not merely a checking ROC filings. A secretarial auditor examines the company's board and general meeting compliances, statutory registers, and verify the records. Also ROC filings and share capital and securities related matters, RPTs related party and director related compliances, applicable SEBI regulations if it is a listed company, FEMA compliances wherever applicable, and other applicable laws and regulations. So the objective is to provide an independent view on whether the company has complied with the applicable legal and regulatory requirements. So which provision deals with the secretarial audit? Secretarial audit is principally covered by section 204 of Companies Act 2013, read with Rule 9 of Companies Appointment and Remuneration of Managerial Personnel Rules 2014. So this is a prescribed report, that is form MR-3. So which companies are mandatorily required to conduct secretarial audit? So there are four important categories. If you see, the first, every listed company. So every listed company is required to undertake secretarial audit. There is no 50 crore cap. There is no 250 crore threshold for a listed company. Second thing is a public company having a paid up capital of 50 crore or more. So here, if an unlisted public company having a paid up share capital of 50 crore or more, secretarial audit becomes applicable. Third point is the public company having a turnover of 250 crore or more. So if a public company having a turnover of 250 crore or more, secretarial audit becomes applicable. Here the important is the capital and turnover test, or these are alternative tests. So the company does not have to satisfy both, either one, mandatorily applicable. So the fourth one, the company having the bank or public financial institutions borrowings of 100 crore or more, whether it is a private company or public company. So it is every company. So this is a very important provision. A company having outstanding loans or borrowings from banks or public financial institutions of 100 crores or more is covered. And here we have an important point. This provision uses the expression every company. So therefore the borrowing criteria can also bring a private company within the scope of secretarial audit. So the 100 crores borrowing criteria was introduced with effect from 1st April 2020. Another question is, secretarial audit is applicable to a private company? See, normally private company is not covered merely because of its share capital or turnover. For example, a private company has a paid up share capital of 60 crores and turnover of 300 crores. So does secretarial audit automatically apply? No. Barely because of these two things, it is not applicable. The 50 crore paid up capital, 250 crore or turnover criteria under Rule 9 specifically apply for public companies. However, if the private company has outstanding loans and borrowings from banks and public financial institutions 100 crore or more, then secretarial audit is applicable. So this is one of the most frequently understood area. Is it 50 crore or 250 crore or 100 crore? See, the answer is there are alternative triggers. If a public company, if one of the applicable threshold is crossed, then secretarial audit become applicable. I'll give you an example. Paid up capital 40 crores, turnover 300 crores, borrowing 50 crore. Secretarial audit applicable? Yes, because the turnover is 250 crore. 250 crore or more. Public company, secretarial audit applicable. Another example, paid up capital 30 crore, turnover 150 crore, bank borrowings 105 crore. Secretarial audit applicable because the borrowings are more than 100 crores. Which date should be considered for determining the applicability? This is a very important practical question. The explanation to Rule 9 clarifies that the relevant paid up share capital or turnover or outstanding loans or borrowings are to be considered as a existing as on the last date of the latest audited financial statements. So therefore the company should not simply look at the present balance sheet or temporary increase during the year. The applicability has to be determined in accordance with the Rule 9 test based on the latest audited financial statements. What exactly is included in the 100 crore borrowing test? The rule specifically refers to outstanding loans or borrowings from banks, public financial institutions. Therefore, one should carefully analyze the source, nature of the borrowing. So do not simply add every liability appearing in the balance sheet and call it as a borrowing. For example, loan from director or group companies or other entities should not automatically be treated as a bank and public financial institutions borrowings for this particular threshold. So the source and legal nature of borrowing have to be examined. So who can conduct secretarial audit? Secretarial audit under section 204 is conducted by company secretary. In practice, the report is issued in the prescribed format form 3, MR-3, form MR-3. For listed companies, there are additional SEBI requirements are there from April 2025, 1st April. SEBI Regulation 24A introduced specific requirements concerning eligibility, peer review, appointment and tenure of secretarial auditor of a listed companies. So what is form MR-3? MR-3 is a prescribed secretarial audit report. The report is annexed to the board's report. MR-3 is a prescribed under Rule 9. The report broadly records the secretarial auditor's examination of the company's books, papers, minutes, forms, returns, and other records of the company's compliance with the applicable laws. What does the secretarial auditor actually check? So this is where the secretarial audit becomes a very practical. A good secretarial auditor secretarial audit does not merely check the ROC filings only, whether MGT 14, AOC 4 filed. The auditor should examine board composition, appointment and resignation of the directors, independent directors, and board meetings, and then general meetings, and then notice and agenda, and then minutes, quorum, and then statutory registers, and then share allotments, share transfers, transmission, alteration of share capital, RPT, related party transactions, disclosure of interest, ROC filings, loans and investments, deposits, directors' disclosures, FEMA compliance, SEBI compliance as applicable, and the listing compliances in case of the listed company, and the policies, governance requirements, other applicable sectoral laws. So the exact scope depends on the company's nature, activities, and applicable laws. Does every non-compliance result in a qualification? See, not necessarily. This is an important point. A secretarial auditor may report qualification, observation, adverse remark, or other remarks, depending on the circumstances and the professional evaluation. A delayed filing does not automatically mean that the company has committed fraud. For example, a delay in filing statutory form may still need to be reported even if the company subsequently filed the form with additional features. The company should therefore not assume we have filed the form later, so there is nothing to report. No. So the auditor has to consider the compliance position during the audit report. What are the common reasons for qualifications in MR-3? In practical secretarial audits, some common areas are delayed ROC filings. Generally, we observe this. Example like AOC4, MGT7, MGT7 as applicable. Then PAS3, DR12 delay, MSME related filings, and other event based filings. And other areas like a board meeting, non-compliance. For example, inadequate notice, quorum issues, improper circulation of agenda items, incomplete minutes, or procedural deficiencies. Then statutory registers may not be updated or may not contain complete information. Then directors' disclosures, for example, MBP1 is there, DIR 8 is there, disclosure of interest, and related compliance, any records, compliance records. So these are all the things. And other area, share capital, for example, allotment of shares, transfer of shares, transmission of shares, dematerialization of shares, PAS3 form, SH7, reconciliation related matters. And in other area we can see FEMA and SEBI compliances. So for companies having a foreign investment or listing securities, FEMA and SEBI compliances. So these are the areas become practically important, and particularly we need to check. Can the company avoid a qualification by correcting the mistake before the secretarial audit? The correction always is advisable. This is important question. If a company identifies a non-compliance, you should take corrective step immediately. However, rectification does not necessarily erase the complete history of the fact that non-compliance occurred during the audit report. So therefore the companies should follow the principle: first identify, then rectify the document and prevent recurrence. Do not wait until the secretarial auditor asks for the documents. Is secretarial audit only about the ROC compliance? No, this is one of the biggest misconception. Secretarial audit which wider than ROC filing verification. Depending upon the company, the audit may cover applicable this like Companies Act requirements, securities laws requirements if it is a listed company, SEBI regulations, if applicable FEMA compliance, listing requirements, and other applicable laws. Secretarial auditor needs a complete compliance universe of the company. What happens if the secretarial auditor gives a qualification or observation? Section 204 requires the board to explain in its board's report in full, and if any qualification, observation or other remark made by the secretarial auditor in the report. So the board should not simply reproduce the qualification. The board should record, or the board report should contain an appropriate explanation addressing the issue. So what is the penalty for non-compliance with section 204? 204 subsection 4 provides, this is for a penalty where the company officer or a company secretary in practice contravenes the provision of the section 204. Company should not treat secretarial audit as merely a documentation exercise. Failure to comply can have a statutory consequences. Penalty is there. Is secretarial audit applicable to material unlisted subsidiaries of a listed company? Yes. This is an important SEBI regulation. This is SEBI requirement 24A of SEBI ODR. Every listed entity and its material unlisted subsidiaries incorporated in India are subject to secretarial audit requirements. This is separate from simply applying the Companies Act thresholds to an unlisted subsidiary. Therefore, listed companies must separately examine their subsidiaries from SEBI LODR perspective. Has anything changed for listed companies from 1st April 2025? This is one of the most important development for secretarial auditors and listed companies. SEBI has introduced specific provisions relating to eligibility, peer review, disqualification, reappointment, tenure and prohibited services. So for secretarial auditor for listed entities, for example, an individual secretarial auditor can be appointed for not more than one term of 5 consecutive years. This is 5 consecutive years. One term of 5 consecutive years. While secretarial audit firm can be appointed for not more than 2 terms of the 5 consecutive years. This is subject to the applicable SEBI requirements. So listed companies should not simply continue with the old appointment arrangement without checking the revised 24A requirements. This is the most important amendment. Can a company voluntarily conduct a secretarial audit even when it is not mandatory? The answer is yes, because it is a voluntarily. If a company which is not mandatorily covered can consider conducting a voluntary secretarial audit for growing companies, companies preparing for IPO, or companies with institutional investors, or companies with complex regulatory operations. So they can voluntarily go for a secretarial audit. This is a useful governance tool. It can identify weaknesses before they become serious regulatory issues. So what should companies do before the secretarial audit? See, my practical recommendation is to maintain a secretarial audit readiness, a file. It should maintain, among other things, like certification of incorporation and constitutional documents, statutory registers, board and general meeting minutes, notices and agenda items, annual filings, event-based filings, share capital records, director KYC and disclosures, MBP1 DIR8, RPT records, charges, loans and investments, policies, FEMA records, SEBI listing records wherever applicable, committee minutes, agreements, material contracts, and applicable sector-specific licenses and approvals. So this makes the audit much more efficient. So what is the biggest mistake companies make? So the biggest mistake is treating secretarial audit as a year-end exercise. No, secretarial compliance should be monitored throughout the year. So if the company wants to, if the company waits till March or April to start the checking compliance, many historical issues may already have occurred. So a better system is monthly compliance monitoring plus quarterly review plus annual secretary audit readiness. So what is my practical advice to the management is, do not wait for the secretarial auditor to discover the problem. If the company should itself identify what laws applies, you know that, what compliances are due, and who is responsible, whether the compliance was completed, whether supporting documents are available, whether the statutory records have been updated. The secretarial auditor should provide an independent assurance, not become the company's internal compliance department. So if we quickly recap, the triggering point is a very listed company. Secretarial audit is a mandatory. If it is a public company, then paid up share capital 50 crore or more. And if it is a public company, turnover 250 crore or more. Or any company, then outstanding loans and borrowings from banks or public financial institutions 100 crores or more. This is the triggering point. Remember, 50 crore to 50 crore criteria apply to public companies. This 100 crore banks, public financial institutions borrowing criteria apply to every company. The relevant figures are considered based on the latest audited financial statement as specified in a rule line. So the secretarial audit is not simply about the preparing Form MR-3. It is about creating a system where the company can demonstrate we know our applicable laws, we monitor our compliances, we maintain a proper records, and we have a governance system to identify and correct non-compliance. If you are a director, CFO, or the management or professional, or a promoter of the growing company, understanding secretarial audit is extremely important. If you found this video useful, please like the video and share it with your professional colleagues and subscribe to our channel.